Hey everybody, I'm Paula Snow with eXp Realty, and I am with Sean Shiwi from Pen Air today. Hey Sean, how's it going?
Doing great. Living the dream over here.
Awesome. Thank you so much for taking the time out of your busy schedule to do this with us right now. So I know we had talked about, we both work with a lot of first-time buyers, and we've talked about coming together and just sharing some tips with them. Some of the process, what's going to be useful for first-time buyers. So why don't we start by just tell us a little bit about yourself. How long have you been in financing? Tell us about you.
Well, I appreciate that. Thanks for the time. I guess you could say I'm from Florida. My dad was in the military, and we retired here in the early 90s. So I got middle school and high school here. I went to UWF and graduated with a BSBA in finance in 2006. I have 6 kids. My wife and I are married. We've been married for 16 years. My oldest is 18, and my youngest is 4.5. I'm pretty sure we're done. But I always keep options open. But we have a busy schedule. I've worked in the financial service industry for, I guess, close to 15 years, and in mortgages specifically about 7 years. So I have a passion for the part I love about my job is helping people understand personal finance, understand mortgage loans in particular. I mean, it's financing their dreams. Sometimes it's their first home, and then later it's their dream home sometimes. But I try to spend a lot of time with people to make sure they understand the process and to answer any questions or concerns they have.
That's great. That's awesome. Yeah, I definitely have gotten that vibe from you, is that you love to educate, whether it's a first-time buyer or even a repeat buyer. So let's jump right in. So let's talk a little bit about, for the lender side of it, who do you guys consider to be a first-time buyer?
Yeah, a first-time home buyer is anybody who has not had a home ownership interest in the past 3 years. So somebody could have owned a home 5 years ago, 3 years ago. They could have owned 10 homes in their lifetime, but as long as they have not had a home ownership interest in the past 3 years, then they're considered a first-time home buyer, and they qualify for certain programs.
Okay, wonderful. Well, now that you brought that up, programs, tell us a little bit about what sort of programs are available for a first-time buyer.
Well, Pen Air Federal Credit Union is affiliated with the Santa Rosa and Escambia County SHIP and home programs, and they have varying, even between the counties, the same programs vary slightly, but overall it provides down payment assistance that can go towards down payment and or closing costs. That assistance is a silent second mortgage. So it is a mortgage on the property, but there is no interest that's accrued, and there's no monthly payment due. And it has a forgiveness period after a certain number of years of residing in the home as your primary residence. Then it's forgiven either partially or fully.
Okay.
And yeah, go ahead.
Okay, so let's say if I'm the first time buyer, and okay, so let's kind of just take people back to the basics. If I'm the first time buyer and I'm looking to buy my first home, how do I even start this process? Do I, call you? Do you want me to go online to the website? How should I get this whole process started?
Yeah, I find it best to speak to somebody either on the phone or in person. We can set up appointments. I'd say in the digital age, I mean, most of my discussion with members is either on the phone or via email. But it would start with an application. So once we we want, because what we're looking at is we're going to look at credit. We're going to look on what is on the credit, calculate debt to income, have a conversation about your income and your employment history. And also talk about assets, cash to close, and where that down payment and closing costs would come from. We're going to look specifically at, there's so many different financing options available for mortgage loans. So what I'm going to do is look at, well, are there more than one option, and then which is the best option, and give the borrower some options to consider, and we'll talk about the pros and cons and have to make that decision.
So you guys help the consumer with trying to figure out what kind of loan is best for them. You present all of the loans to them.
Yes,
That's
definitely. We have a
awesome.
lot of loan options. And so the first time home buyer program, I would say that the ship and home programs are a little bit more conservative when it comes to their debt to income limits. So and the purpose of that is the monies are allotted for low to moderate income households
Okay.
to try to get the most bang for their buck. And those programs, those counties require a more conservative debt to income than what I can typically qualify somebody with. For example, I may qualify an FHA applicant at 53% debt to income, but the SHIP limit is 41% total debt to income. And the debt to income is their debts, including the proposed house payment, divided by their gross monthly income, is how we calculate it. But so if they don't qualify for the SHIP program because of one reason or another, then there are other options to look at that offer low down payment or no down payment, even a USDA loan, a VA loan. So there's a number of different options to consider.
Okay, wonderful. That sounds good. So if somebody is interested, so they come to you, they meet with you, they get approved for a loan. Let's talk a little bit about what sort of documents are you going to need from them? Maybe not at the first meeting, but kind of like, cover the documents that you are going to need from them in the process.
Yeah, I usually, after I speak to somebody either in person or over the phone, I typically follow up with an email that gives them the application link to submit the application online, and then also a checklist of what we'd like to see. Normally, we want to see pay stubs, W-2s, tax returns. We don't necessarily require tax returns on all applicants. I typically collect them for self-employed borrowers in particular, or other borrowers who have other variable income other than the W-2 employment. We want to see those. And then if they bank with Penn-Air, I can pull those statements. But if they bank at some other financial institution, we need to source their funds that they have for closing.
Okay.
Bank statement.
Okay, so let's talk now about what about their job? How long do they have to be on the job? What if somebody moves from one company to another company? Is that going to affect their getting pre-approved?
That's a good question. It depends on the different loan type. I mean, all loans, the different loans, the government loans, FHA, VA, convention, or USDA, and then conventional loans, a non-government loan, they do require that we verify a 2-year employment history. Now, a 2-year employment history can be constituted of schooling, military education, or training, and certain gaps of employment, depending on the length, could be explained or may not require any explanation at all. It's kind of a case-by-case basis. So typically we're looking at covering a 2-year history from today. And if it's from one particular industry to a different industry, that's not necessarily a problem. Depends on the loan type, and then also a history of, was that change an increase in pay? Was it because they graduated with a nursing degree from a server to a nurse? So things like that can be explained in qualified income.
Okay. And so they get approved by you, they go out, they find a home, and at that point, they send you a copy of the contract. How long should they expect for that process to take before they can close on their home and for you guys to have enough time to do all the financing side of it?
Yeah, I would say so on a conventional loan and even most of the government loans, I'd say 30 to 45 days. I'd say right now it's probably closer to 30 days or less. And on certain cases, we can get closings done within a matter of a couple of weeks. I mean, I have recently, September 2018, I've had recently an FHA loan clear to close in 15 days from the receipt of the clear to close. Conventional loan 8 days. VA loan 20 days. I did a USDA loan, it was a month and a half ago. We got clear to close in 21 days. So I would say that not every file will go that quickly, but if people apply, and they at least get me those minimal items I need, and it's a pretty standard file. They're a W-2 employee, no kind of weird, wonky things, and the appraisal's pretty quick. And it is just a matter of a week or two before we really are firm in a commitment.
Okay. And a question I hear from buyers all the time is, if you will, kind of talk about the appraisal side of things. You know, sometimes buyers ask me if they need to call the appraiser. Do they set that up? How does that all work, the appraisal side of it?
Yeah, we get that question sometimes too, where they have started with another lender and they have an appraisal. You know, certain appraisals, like a FHA or a VA appraisal, can often be transferred from one lender to another. Others, it's sometimes a little like a conventional one, it's a little bit tricky. So we don't, as a lender, we don't really have a say necessarily in selecting a particular appraiser. We use a third-party service to kind of get our hands out of it too. That way, there's no misunderstanding of, well, Sean says the value needs to come in at X. It's not that way. It's here's the contract, and we want an appraisal. So the appraiser is provided a copy of the contract. The appraisal is ordered by the lender on an approved list through a third-party service, again, to avoid any type of misunderstanding about it.
Sure. Yes. And the buyer, and you guys always give a copy of that appraisal back to the buyer.
Correct. Upon receipt, it's typically reviewed by underwriting within a day or two, and barring any minor corrections, it's then released to the borrower. They're provided a copy which they acknowledge, and yeah, they're the ones that get the copy. So we're not sharing it with the seller. We don't even share it with the agent. So it's just it's the buyer.
Great.
And I would add at Penn Air, we typically don't pre-collect the appraisal. A lot of other lenders pre-collect. So it's normally just one of those costs estimated in the cash to close figure. And I guess that would, if we start the process, that would be the only fee that would be a collectible fee. So if we get into the loan process and somebody says, I changed my mind, I'm not going to do the purchase anymore. If we've already ordered the appraisal, then that's what they would be on the hook for, at least at Penn Air. But all the other costs, again, are going to be collected and paid at closing.
Okay, great. So I'm sure you probably, I hear this all the time, and tell me if you do as well, but buyers will come to me, and nowadays with all the technology, you know, buyers are very savvy. And I mean, a lot of times they know the homes they want to look at. They already know, you know, comps, values in those neighborhoods. But a lot of times I will hear them say, you know, they know their credit score. So they're pulling their credit score off of Credit Karma or other credit tracking tools. So is that credit score accurate, and can the buyer give you their credit score, or tell us, like, you know, how does that all play into it?
That's a great question. A lot of people have that question. So there's different minimum credit scores that lenders have, and they vary based on the loan product in particular. So when we pull credit, we have a credit provider, CIC Credit, that Penn Air currently uses. And what we do is we pull all three credit bureau reports, Experian, TransUnion, and Equifax. We drop the highest score and the low score and use the median score to price and qualify the borrower. If there's joint borrowing, we use the lesser of the two median scores. So if one applicant has a median score of 750 and the other applicant has a median score of 650, we're going to use 650 to price and qualify the loan. I find that when people ask me, they say, oh, I'm with, you know, Credit Karma or whatever provider, and my score says it's X. I would say the majority of times when I pull the credit on my end, the score comes in less than that. It's not always, but I would say the majority of the time it is. But I do find it useful to track it for borrowers to see the improvement or if there's a decline. So there's some benefit with that, because that is accurate. But if somebody comes to a mortgage loan, it's one type of calculation. If they go to the car dealership, it's another. If they come to Penn Air and apply for an auto loan, it's a different score calculation. So there's over a dozen different scoring models out there. For mortgages, if somebody were to have shopped and gone to another lender before talking to me, they're typically, that score is going to be probably very close to what I pull if we pull it within, you know, a week or two. But
Okay.
credit is very fluid. The credit score is very fluid. Most creditors, Penair, for example, we report towards the beginning of the month, and we report to all three credit bureaus. So if you make a payment on a credit card or pay off on a credit card to pay the balance down, well, it may not be updated for 30 to 45 days. So people ask questions about that, about when to pull credit, and there's some variables there. I would add, and I'm sure, Paula, you have told your borrower or buyers this, that once you have a contract, you don't want to have your credit pulled at all.
Yes.
Once you're in the process, because what happens is we monitor people's credit. We're not monitoring any scores up and down, but we're monitoring inquiries to make sure that somebody didn't go get a new vehicle and now they no longer
Yes.
qualify. And we will monitor, at least at Penair, up to the day of closing. So if we close today, and I've told borrowers this when I'm at closing, hey, even up to today, do not get your credit pulled. If you want to go buy a new fridge tomorrow on credit or furniture, do it tomorrow, because even after you're closed, you signed everything today, we're still monitoring the credit through today. So that's something to be mindful of.
Yes. Actually, I did have a situation where we got to closing, and one of my couples had gone out and bought $4,000 of furniture. And so we were sitting at the closing table, and the lender pulled credit, right at the last minute, and it affected their debt to income ratios. And for a while there, we were nervous that they were not going to be able to close. So a lot of people think they're approved, and then they can go out and buy whatever. So I'm glad you mentioned that. So let's talk about I've had some buyers that come, and I know myself, I went through a divorce a number of years ago, and so I had to reestablish credit right after my divorce. I had no credit. So can you talk a little bit about how many trade lines, and let's even talk about what trade lines are, and how many items do people need to have on their credit ideally to get approved?
That's a great question, because in the past, it used to be you had to have a certain minimum number of trade lines.
Mm-hmm.
Well, there's not really any hard and true mortgage guideline out there. I've qualified people with just one trade line, small credit card or something,
Great.
personal loan. I would say, though, that most people need to have a mix of credit. An installment loan, for example, is an auto loan or a personal loan, a student loan, and then a revolving credit line is a credit card or a store credit card, or even a small line of credit at their financial institution. The one great thing about Penair, if somebody comes to talk to me about mortgage loans and they need to work on reestablishing their credit or establishing credit for the first time, they've never really done anything, then even here at Penair, they can go to one of our branches, and we have secured loan products that help establish people's credit.
That's awesome.
That's beneficial. I've spoken to a number of people in similar instances where they've had credit issues in the past.
Mm-hmm.
And the good thing about, even if they've had a foreclosure or a bankruptcy, people are surprised at how flexible mortgage guidelines are today, with allowing, just maybe even after 2 or 3 years after a bankruptcy or foreclosure, somebody being able to requalify for a new home. So
right. Yeah.
Mindful.
That's awesome. That's great. So any other final tips that you would want to share with any first-time buyers that are watching?
Just to talk to me. No, and you. No, I would just, what some people don't understand too, and this, in the lending process, I guess, is they come to see me, and I give them some numbers. Okay, here's the rate today. Here's our estimate of closing costs. And I can provide a pretty accurate estimate up front. Is they may have shopped with another lender, and I get calls and say, "Hey, Sean, I shopped with so and so, or two or three other lenders," and that's fine. They're shopping rates. If somebody calls me and says, "XYZ lender pulled my credit. They said I have a 700 credit score. I'm looking to purchase this home for X amount of dollars and put this much down," I can tell them, well, here's what our rate would be. Here's what our fees would be, without even pulling credit. So, I find it beneficial to shop, and I'm not afraid for people to shop me, because the Penair as a credit union is typically at or below market pricing with rates, and then our fees are typically less too. We're actually exempt some fees as a credit union, which is a benefit. I find to just work with who you feel most comfortable with, and deal with somebody that's going to give you the appropriate time that you need to understand the process. And I know Paula is somebody that does that, does great with that on the realtor side. And I'm going to do that as a lender here at Penn Air.
Yeah. Yeah, that's awesome. Wonderful. Well, Sean, thank you so much. And so how can people get a hold of you?
They can call me. My phone number is 850-505-3200. My extension is 8364. And my email is Sean, but you got to spell Sean right. It's SHAUN at Penair, PENAIR.org. Be happy to help answer their call or send them an email. Yeah.
Wonderful. Great. Well, thank you so much again, Sean, for taking the time to do this. And if you have any questions, by all means, reach out to Sean. I have loved working with him, and let me know if you have any questions that I can help you with on the real estate side of it. Thanks so much for watching, and we hope to see you soon.